Hello everyone. Welcome to the channel that aims to find happiness. Remember the fable of the tortoise and the hare? Slow and steady wins the race, right? Well, in the stock market, being the hare with your day trades might seem exciting, but it's the tortoise with a well-thought-out long-term investment strategy, who might just be sipping cocktails on a yacht in the end. The stock market is a whirlwind of activity, with the index at the heart of the storm. As we delve into a mix of domestic and global factors paints a complex picture for traders and investors alike. Let's unpack the current market dynamics, spotlighting the top gainers and losers. While peering into the economic indicators shaping the landscape, the stock market, a bustling hub of investment and speculation, continues to captivate with its dramatic swings. Amid this, the index serves as a barometer for the broader economy, reflecting the performance of 50 major stocks listed on the National Stock Exchange. However, not all sail in smooth waters. Firms have faced challenges reflecting the competitive and ever-changing market environment. Their struggles offer critical lessons on adaptability and strategic planning. Foreign direct investment is the lifeblood of economic growth. Yet India witnessed a 13% decline in FDI inflows from April to December last year. This downturn raises eyebrows and questions about the underlying factors and the path ahead for India's economic ambitions. The promise of transformative reforms in digital infrastructure, space, artificial intelligence, and other sectors sets a hopeful tone for the future. These initiatives could significantly influence market sentiments and investment flows, shaping India's economic trajectory. The global economy, with its ebbs and flows, directly impacts markets. Recent developments in the US, including the anticipation of PCE inflation data and GDP revision, alongside the Federal Reserve's interest rate strategies, have investors on edge, highlighting the interconnectedness of global financial systems. Looking ahead, economic indicators and market sentiments. With an eye on inflation trends and policy shifts both domestically and internationally, the market's direction remains a subject of intense speculation. Understanding these indicators is key to making informed investment decisions in a landscape marked by unpredictability. In the whirlwind world of finance, where a week feels like a minute and market indicators swing like a pendulum, there lies a hidden gem of wisdom. As old as time itself, yet as relevant as the latest the videos posted on this channel update. Sit back, grab your cup of joe. Let's embark on a journey where ancient wisdom meets modern market madness. Imagine the financial markets as a grand ballroom. The stocks, bonds, and commodities are dancing in sync to the rhythm of economic indicators. Now, throw in a sprinkle of consumer confidence, a dash of inflation. You have the recipe for a market that's as unpredictable as my Aunt Martha's mood swings. But what if I told you that amidst this chaos, there's a way to find your groove? Why bother with ancient wisdom? You might ask, as you swipe through charts and graphs on your ultra-modern gadget. Well, because, my dear Watson, sometimes to move forward, you need to take a glance backward. The ancients weren't just about philosophizing and wearing togas. They had insights into the natural world, human behavior, and yes, even economics, that could give us a leg up in today's financial frenzy. Enter the I Ching, an ancient Chinese text that's more than just fortune cookies and sesame. It talks about balance, change, and the dynamic between yin and yang. Imagine applying that to the stock market, recognizing when to hold them, fold them, walk away, and when to run. The ancients were onto something. They understood that everything moves in cycles. Economies, markets, even your luck with speculative stocks. By embracing their insights on cycle, balance, and change, we might just find ourselves surfing the big waves instead of wiping out. It's about knowing when action is needed and when you should just let things be. In the market, this could mean not panicking over every dip or resisting the FOMO on every speculative bubble. The ancient concept of yin and yang is about balance. Not too much, not too little. Apply this to your portfolio, and you're looking at a mix of high-risk, high-reward investments and safer bets. It's like having a diet of salads and the occasional double cheeseburger. Balance is key. In the mythical market kingdom, the bullish dragon soars with optimism, while the bearish phoenix rises from the ashes of downturns. The wise investor knows that both creatures have their place in the cycle of the markets. Embracing this duality can lead to a strategy that's resilient in the face of volatility. You might think that the ancient texts and modern financial algorithms are worlds apart, but you'd be surprised at the parallels. The underlying principles of cycles, balance, and adaptation are as evident in today's algorithmic trading strategies as they were in the musings of ancient philosophers. Just as ancient mariners navigated the vast ocean with the stars, modern investors can navigate the financial markets with the wisdom of the ancients. Recognizing patterns, understanding the cycles of growth and decline, and maintaining balance can be the compass that guides us through stormy economic seas. Take Alibaba, for instance. In the modern saga of e-commerce battles, applying the strategic insights of Sun Tzu's The Art of War, knowing when to fight, when to retreat, and how to outsmart the competition, could very well be the strategy that leads to victory in the marketplace. The consumer price index might seem as dry as my grandma's turkey, but understanding its fluctuations and what they signal about consumer behavior and economic health can be akin to mastering the Tao of prosperity. It's about seeing beyond the numbers to the flow of economic energy and trends. There are legends in the financial world, investors who have mastered the art of timing and patience, embracing the ancient wisdom of knowing when to act and when to wait. These are the folks who, against all odds, found the golden opportunities hidden in the market's ebb and flow. Not every tale is one of triumph, though. For every sage who successfully navigates the market's mysteries, there's a cautionary tale of someone who misread the ancient maps. These stories serve as humble reminders that wisdom, ancient or modern, requires understanding and respect. The principles of balance and cycles aren't confined to any one region. They're as global as Netflix. Whether it's the Eurozone grappling with inflation or Australia's CPI nudging upwards, the ancient wisdom of recognizing and adapting to economic cycles holds true across continents. The dance between emerging markets and established economies can be seen as the global manifestation of yin and yang. Each plays a vital role in the global economic balance, with the potential for both to learn from and complement each other. Just as the ancients taught us, in an age dominated by AI and machine learning, the question arises, can ancient wisdom still find its place? Absolutely. By blending the insights of the past with the technology of the future, investors can forge new paths that are both innovative and grounded in timeless principles. Ultimately, the goal is to find a sense of zen in the tumultuous world of investing. It's about achieving a state of calm and clarity, where decisions are made not in a rush of greed or fear, but from a place of balance and wisdom. Perhaps in this pursuit, the ancient sages and modern investors aren't so different after all. As we wrap up our journey from the frenetic world of finance to the serene wisdom of the ancients, we're left with an intriguing proposition. In the complex dance of the markets, the steps we need might just be found in the footprints of the past. So, as you ponder your next financial move, remember the I Ching and the balance it teaches. After all, the key to navigating the future could very well lie in the wisdom of the ages. Let's raise our cups to the ancient sages, whose insights continue to illuminate our path, even in the bustling world of modern finance. Cheers to finding prosperity, not just in our portfolio, but in the harmony of our approach to life and investing. To put it simply, we have witnessed that it is not only feasible to combine ancient Eastern wisdom with modern financial strategies, but it is also possible. This is a revolutionary invention, from embracing change to finding a balance between empathy and determination. This perspective on business management is refreshing thanks to these principles. Therefore, let's stay optimistic. These timeless and timely strategies can help businesses thrive. The importance of balance and smart strategy cannot be overstated. The key is to find the perfect spot and maintain agility, just like a tightrope walker with a safety net. To navigate the future economy, it is crucial to adopt careful and smart strategies that emphasize balance and adaptability. The current global market situation is not a simple matter. It has both favorable and unfavorable factors, as well as opportunities and risks. The environmental resources of each region on Earth are unique due to their different latitudes and longitudes. We can summarize real-time opinions using artificial intelligence operations, such as neural networks, that take into account regional characteristics and national economic data. By watching our videos every week, you can keep yourself informed with a wealth of information that will improve the quality of your life in many ways with minimal time investment. In order to survive in these volatile financial environments, it is crucial to be able to adjust and avoid increased risk. Regardless of how experienced you are in investing, it's crucial to keep an eye on our video debuts to make better decisions. It's crucial to remember that knowledge is not just a tool to enhance your value, it's also a power. If you have any topics you're interested in, feel free to leave a message. If you find that today's video is helpful, please like it so that you can easily find it later when you need to watch it. It is not yet necessary to start reducing rates. The US Federal Reserve's implementation of easing policy has not been expected or evaluated by us. Among these are videos on this channel since last year. The reason for this is that the hexagrams in the book of changes indicate that the process of cutting rates is not yet initiated. To conclude this episode, I want to express my gratitude to all the viewers for their support. Thank you, 谢谢.